Hello, good afternoon, everyone, and welcome to today's episode of Modesty's Money Masterclass. Modesty's Mortgage Masterclass. This is session number 29 of our Modesty's Mortgage Masterclass. And it's the midweek again. It's that time of the week when we're in between the start and the end. And you don't know whether to be excited because the week is coming to an end, or whether to just wonder how quickly the week has run out away from the beginning. So we are bang on in the middle of the week, and there is no better time for us to come together and learn and educate ourselves, enlighten ourselves once again on everything happening around us in the world of mortgages and properties. So I remain your man, Ikenna Omezudike. I'm the director of Modesty Financial Consultants Limited. We're a financial consulting firm based in Luton, United Kingdom. We specialize in mortgages, protection, financial consulting, and investment advice. Okay, so today we are going to be talking about, we're going to be answering a question, a bizarre one, isn't it? On why are asking prices increasing in a pandemic. It's a bizarre situation, but it's a question nonetheless that we're just going to try and analyze and find out what actually is happening and what's the facts and what are the analysis around these figures. But before we get there, as usual, every week, every midweek on this program, we start this session with a positive vibe of the week, because we want to kick off with something positive and it keeps us buzzing and it keeps us going. So our positive vibe of the week, we'll take that and then we'll discuss the issues around average asking price for properties increasing in a pandemic. And then the HMRC has released their latest figures on properties and housing market activities. We're going to look at that. And then we're also going to look at our live case of the week. And then we close from there. So, first of all, positive vibe. Our positive vibe of the week is coming from my clients, a very good one at that as well. I've got many good friends. And you know what? My clients are turning to my friends, really these days, because we are going beyond a clientele relationship to being friends. And, so I treat them as friends, they treat me as friends, because we struck up a very good relationship from the onset. We pay very good attention to rapport building and to friendship. Hi Nadike, good afternoon. Thanks for coming on. Kayode, good afternoon. Thanks for coming on, brother. So, our positive vibe of the week is coming from my client named Freddie. And this is what he wrote. He left us a 5-star review on Yale.com. Fantastic, and we really appreciate it. So we want to share that with our audience to see this is what he's got to say. He said, I experienced an excellent and great delivery of service by Modesty Financial Consultants Limited. I have been struggling to have a mortgage due to 2 defaults I have on my financial record, which obviously made life hard in terms of getting a mortgage. And then a friend recommended me to Ikenna. From day one, he has always believed he would deliver, though he said to me it would be tough. And behold, when I started the journey with him, it was really tough, and I thought there was no hope. And then he also said, but Ikenna took the whole matter to another dimension, and he delivered. I love that. He delivered. His way of working and work ethic is so excellent that he knows when and how to push his narratives across to the underwriters and to the lender. Ikenna worked his magic, abracadabra. Ikenna worked his magic and got me a mortgage offer despite 2 defaults, which is the most amazing thing that happened to me lately. I would definitely use them again, and I highly recommend Modesty Financial Consultants Limited for their good value, strength, and especially their resilience. Thank you so much. Thank you, Frederick. We really appreciate that. And I was just blown away with this comment because he really took his time to write this 5-star review for us, and I'm really happy for him as a client, because I think I mentioned this case here some time ago. You remember my client, I mentioned this case. He's in Scotland and he was looking to buy a property. It was difficult. More than 6 months ago, he got turned down by the lender. The broker said there's no way we can do this case. The lender has refused it. And then somehow we picked the case up, and now the day I sent his offer letter to him, he was on the phone to me. He was so excited and he said, "Iken, I'm rolling on the floor. I can't believe this happened." So reactions like that really give us a serious boost in what we do, and it just makes me feel ever so fulfilled within myself, knowing that I'm helping people fulfill their dreams. So thank you very much, Frederick, for that. And please leave us a review on Facebook, on Google, on Yale.com, wherever you come across. Just let us know what you feel, and we'll share those positive vibes with everyone that we come across as well. That is why we do what we do. Okay, so enough of the head swelling review. Okay, let's get down to business now. Now, the HMRC has released their the data on property sales for August. Now, this data, you can look at it from two different angles, but from the angle of the HMRC, I'm going to tell you the other angle you can look at it from. From the angle of the HMRC, they are saying that the August property sales were down compared to this time last year. Okay, so in comparison to this time last year, the property sales in August, was down. So the HMRC figure shows that the property sales that were registered by the HMRC. It's very important that you understand the context of this. For every property sale that happens, the HMRC has to register it. So this is the number of registered sales by the HMRC compared to what it was by this time last year. Remember, we're in a pandemic, and the HMRC is not immune to the pandemic, in the sense that the same capacity issue that other organizations suffer, the HMRC also suffers that. So that means some people might be working from home. They have reduced capacity in the office. Not everybody comes to the office, so workload is higher than it used to be, and there are less people to do that much work that's coming in. So a lot of property sales that are supposed to be registered may not have been registered due to capacity issues. Nevertheless, the HMRC owes the nation the data and the statistics. Okay, so from the HMRC statistics, the August sales, the registered sales by the HMRC was 16.3% down from this time last year. Okay, so in August, according to HMRC records, there were 81,280 property sales registered by the HMRC in August 2020, which is lower than this time last year. And remember, by this time last year, everything was normal. The HMRC office would have been fully packed with staff, but then this time they are really short on staff, and capacity has been reduced so that they can observe social distancing in the office. Hi Linda, good afternoon. Simon, I can see you. Good afternoon, thanks for coming on. So, but even at that, it's 16.3% lower than this time last year. But if you compare that to July figures, it's 15.6% higher than the July 2020 figures, which is why I said it depends on which angle you want to measure. If you want to measure month on month, the figures were 15.6% higher. But if you want to measure year on year, the figures are 16.3% lower as registered by the HMRC. So year on year is a reduction, month on month it's an increase. And if we focus on the month on month comparison, that's pretty significant. That's beautiful. It means that almost 16% more properties were registered in August than were registered in July. So it shows that another month, another increased activities in the property sector. So though there has been a significant rise in transaction levels since lockdown restrictions were eased in May, the sales volumes to August has been lower than this time last year. Okay, so we know that since the restrictions were lifted in May, there has been increased activity in the property sector, but still lower than compared to this time in May. But month on month, we have seen that it's actually higher. So that increased activity is actually telling when you compare one month to the other. So if you now look at the year to August volume, that's from the beginning of the year to August, the volume of property sales shows a 24% decline compared to the same time in 2019. So year to date means if you are measuring from January to August 2020, and if you measure it from January to August 2019, it's a 24% decline. So that it's fallen by 24%. So from January to August year to date, there were 594,760 property sales registered from January to August. So it's 24% lower than what it was by this time last year, year to date, I mean. So what does this figure mean to us, and what does these stats tell us? You see, the HMRC figures, as we have heard it now, actually shows it shows that the property industry is continuing to recover month on month. So month-on-month figures shows that there are increased volumes of property activities. The property activities in August were better than that of July. So it means that the month goes by, there's increased property activities going on here in the UK. But then we can see from these statistics that things are still far from being normal, because we don't live in normal times anymore. So bear in mind that HMRC figures relate to completed sales in August. So these are sales that have been completed, right? So these sales that have been completed in August would have been agreed around April, May, time, because it takes time to complete property sales, really. It takes, say, between 2 to 3 months or thereabout to complete sales. Some sales even take longer. I've sold a property that took more than 6 months to really complete. People who have completed on properties will tell you, there are different stories. It's house sales don't really go as straightforward as you would envisage them to go. There's always one thing popping up at one stage of that sale, because it's a legal process. All right, the solicitors have to do their searches. You've got to get a mortgage. The lender has to approve the mortgage. You have to take their time to assess the mortgage and make an offer, and then you've got to show proof of funds, and then the solicitor will have to correspond with the other solicitor. So you are dealing with 2 solicitors at the same time, and depending on who is responding quicker. So there are so many complexities. And then before you go through all that, so some of those sales that were completed in August might have been agreed in, say, around April, May, because these figures by the HMRC are just figures based on completed sales. So, or even before then. So during this period, we know that the property sector was basically on shutdown. Nothing was happening at that time. So since the reopening of the market, more sales have been agreed, and then enough time has now passed to show that more sales have been agreed and would have been completed. So if we are talking of the backlogs from pre-lockdown or around the April, May that are being completed in August, what about sales that were now agreed after the lockdown restrictions were lifted? So enough time must have passed for more of those sales to have been agreed. So what does that tell us? It's a good indication that the figures are going to get even better by, say, September figures are going to even be better than the August figures. Because if we are going by how long it takes to complete a sale and register with the HMRC, it means that those sales that were agreed after lockdown was lifted, there is enough time now to have completed them. So by September, those ones will now be feeding into the HMRC statistics as well. The market is very active at the moment, and it's been spurred on by the stamp duty holiday, and it's been spurred on by buyers and sellers making up for lost times. Because of how much time we lost during the lockdown and all that, there is a lot to make up for. So buyers and sellers are really scrambling to make up for the lost time, and it's hitting up the activity in the property market. And the record number of sales are being agreed at the moment. So all these are pointers to the fact that September figures are likely going to be better than August figures when it comes to completed sales in properties. So, but because of the lost time, we lost 3 months during the lockdown. The volume of activity since the reopening of the markets in 2020, in May 2020 figure, it shows that it's above what was achieved last year. If not for the lockdown, if not for the time that we have lost, the pace at which the market is moving now, the volume of sales and the activities since we reopened in May 2020 shows that it has even surpassed what it was by this time last year. But unfortunately, this will not be the case, because of that time that we have lost. If we didn't lose that much time, the 3 months that we lost during lockdown, the figures for 2020 would have been far better than figures for 2019 in the properties industry, in the property sector. But the reason it's not going to be that is because now we are playing catch up in 2020 because of the time that we've lost. So unfortunately, there will not be enough time in 2020 to catch up and surpass what the figures were for 2019. So that's the reality of what this year is going to look like. But nevertheless, it's been impressive. It's been pretty impressive. So you see, analysts expect, that in this year 2020 there will be less than 1.1 million property sales agreed. Hi Anjana, hello. Thanks for coming on. Yeah. So analysts expect us to have less than 1.1 million property sales agreed in this year compared to the previous years. You see, between 2014 and 2019, it's been averaging about 1.2 million property sales between 2014 and 2019. So 2020 is going to fall short of that for the reasons that I've mentioned here, because of the time that we have lost in the lockdown. For the 3 months that nothing happened, the property sector was absolutely shut down. But if you look at the market recovery since May, since the lockdown restrictions were lifted, it's been pretty impressive. But there isn't enough time in the year to catch up to previous years. Okay, so but we have still exceeded expectations, because nobody believed that the property sector would be doing this well with the pandemic and what happened between March and May. Nobody gave the property sector a chance. But then the property sector has really surpassed expectations. So these figures still suggest that the activities in the property sector has been really encouraging. So what has been fueling this? It's been fueled by a combination of things. People rushing to get their purchases through after the lockdown. Immediately after the lockdown, all the outstanding property deals that needed to be done, people are rushing to get these sales through, and it's really heating up activities in the market. And then again, the continuous flow of pent-up demand is fueling these activities. The continuous flow of pent-up demand is fueling these activities. And then throw in the financial incentives that comes with the stamp duty holiday. And then that's petrol in the fire of the activities, really heating things up, continuing to fuel the property market. So the markets therefore looks like it's business as usual, but then it's not. Yeah, it's really important for us to know that, look, these things, what we are seeing now is artificial at best, because these are not normal times, and these figures are not normal. They are not in correspondence with the times that we are in. So That's why we are mentioning these factors. And if you look at these factors that we are mentioning, a lot of them are not synonymous with normal times. So it's very, very important that we know that these are artificial situations that we are having to cope with and deal with. But the market is coping with it as much as it can. And that's why it's taking everybody by surprise that by people's expectation, even by the market expectation itself, the market did not expect this much activity at this time. But these are the factors that are fueling this. The financial incentive that comes with the stamp duty holiday, people rushing to get their property purchases through, and the continuous flow of the pent-up demand in the marketplace. It's really, really kicking things off in the market. So the market looks like it's business as usual, but it's not business as usual. There's the normal fear. There's the normal thing that people are afraid of. Not just buyers, not just sellers, but even the lenders and the wider aspect of the UK property market. There's fear about the UK's economic recovery from the pandemic. People are not very certain about what's going to happen to their jobs and their finances. People are not very certain about what's going to happen when the furlough scheme ends in October. So the fear of that UK economic recovery is real, and it's going to start playing out in the marketplace sooner rather than later. But as it is now, the statistics, the figures that are being churned out by every available data collector in the property market is showing that the market is on the up. Okay, but but I'm going to come to explaining why it looks like those fears are not being reflected in the figures coming out in the market. I'm going to come to that. So consumer confidence is a very, very important part of the market, because if consumers are not confident about their financial future, they'll be skeptical about putting in a lot of money or making huge financial commitments towards, because property purchase is a huge financial commitment, and it goes hand in hand with consumer confidence. So consumer confidence is very, very vital in sustaining this trend and in sustaining this particular trajectory that the market is on at the moment. So the current market activity is largely driven. Now that's where I'm going to tell you why it looks like these things, like the fears are not being reflected in the markets, in the activities of the market. Because hi Amaka, good afternoon. Because the markets currently and the current market activity is hugely, very important. This is hugely driven by people with large deposits. Okay, so there are people with huge amount of deposit at the moment looking for properties that are aligned with their housing growth needs. Because at the moment, we see it every day in our mortgage business. There is acute shortage of mortgage products for people with small deposits. To get a 90% loan to value mortgage now is really, really hard. So even some lenders dip into it and dip out. In fact, I had a lender over the last couple of weeks that have introduced a 90% loan to value mortgage just for 2 days in a week. They will open it up for 2 days in a week, and then they withdraw it after the 2 days. They've done that like twice in the last couple of weeks. So they say, okay, between 8 o'clock in the morning on Monday to 8 p.m. on Tuesday, we are offering a 90% loan to value mortgage product. And they can only accept it if it's a full mortgage application. So even if you do a mortgage in principle and you don't submit a full mortgage application, that product does not apply to you. Okay, so there is one lender that is currently still offering 90% loan to value, but you have to fit into that high street lender criteria if it's a high street bank. What about people who don't fit into the high street bank or high street lender criteria? They are out of the market. So these are the things that are abnormal in the market. That when you see the increased market activity, and you'll be thinking, what's going on? What's fueling all these things? People with huge amount of deposits who are looking for properties that align with their property, with their housing growth needs, are basically fueling the activities in the market. So because these people are looking for something different from what they have, because some of them have been locked down for months, for like 3 months, they've been locked down in their houses during the lockdown. So immediately the lockdown was eased, they want something different. They just, maybe they live in a small house and they just want something more spacious. Maybe they live in a flat without a garden and they wanted somewhere with a garden. So they just want something different. And these people with huge amount of deposits are really pushing the market beyond its expectation. So the implication of this is that first-time buyers especially, who are the people who are mostly in need of high loan-to-value mortgages, are priced out of the market. They are shoved aside. The activity is just trampling upon them, and they can't keep up and they can't measure up to that, because even if they want to buy, there are no products in the market that serve their needs or serve that can satisfy their needs. So they are really shut out of the market. So what we are seeing here is the market operating, running, moving on without the first-time buyers. So the first-time buyers are not even part of the equation, and it is this busy and it is this congested. If the first-time buyers market opens up and they come into the market, it's just going to explode. So part of the reason the first-time buyers are being shut out of the market is because they are people in that category are the ones who are most affected financially with by the pandemic. All right, so they have the least amount of deposits, and they are the lowest earners in the market ladder. So they cannot keep up and they cannot measure up with those. So, and the lenders are not helping matters as well, because they are not willing to take that risk yet to introduce high loan to value products, because they are looking to limit their risk exposure in the market. So unfortunately for first-time buyers at the moment, it's not a first-time buyer's market unless you've got a sizable amount of deposits, and then you can get a mortgage, say from 85% loan to value mortgage, downwards. So the purchase conveyor belt is greatly slowed down, right? At the moment, I describe it like a conveyor belt. Yeah, it's what we are loading onto that conveyor belt is becoming the conveyor belt is becoming too congested due to high demand. Okay, and now what it's doing is slowing down processes. So that conveyor belt is not moving at the pace and the speed it's supposed to move in terms of purchases. I'm not talking about the activity, I'm talking about the processes that support property sales. Like the mortgage process, the solicitor process, the conveyancing process, the lending process, the whole house sale process is getting slower and slower because the demand is incredible. And that's why that process is getting slower and slower. So this spills over into those other supporting services, like mortgages, like lenders having to deal with huge backlogs and all that. Everybody is affected. So it causes delays with inquiries, with lenders even, which may some consumers are becoming frustrated. Some consumers are becoming, their confidence in the system is being affected a little bit because they feel like, why is this taking too long to happen? So, and that's why we always try to advise and educate our consumers to say, calm down, okay? We're not operating in a normal market. Under normal circumstances, your mortgage shouldn't take this long. Under normal circumstances, conveyancing shouldn't take this long. Under normal circumstances, the sale process shouldn't take this long. But we're not in a normal market. So the high demand that we're experiencing plus reduced capacity in all these setups is contributing to the slowing down of the processes, because all these institutions and organizations are operating at a reduced capacity because they are having to deal with all these demands, but there are not enough staff in the office to deal with all of them. So consumers are showing incredible rates of understanding and empathy as well when we explain these things, they understand because everybody knows what's going on. So, but lenders are fashioning a different way of having to deal with these backlogs and these high demands and in inquiries. What they are doing now, they are reducing the amount of products available in the market, and they are tightening their criteria around lending. All right? So, and all these things are not favoring the first-time buyers at all. When criteria are tightened and when products are pulled out of the market, the biggest and the worst hits are the first-time buyers. So even for those who are already in the marketplace, it's affecting everyone because the lenders are now saying, okay, we've got loads of backlogs. We want to discourage this increase in demand and inquiry. So we're going to withdraw some of our products and we're going to tighten the criteria a little bit so that there will be fewer people who fit into our criteria and there will be fewer products to choose from. So that's their own way of having to deal with it while they fashion out the other ways of increasing capacity. Okay, so that's about the HMRC figures and the implications and analysis around that. Now let's talk about those asking prices. We've asked the question before. Why are asking prices increasing in a pandemic? Now this question is emanating from the figure from Rightmove. Rightmove is the biggest property portal here in the UK with over 52 million visitors every month looking for properties. So it's a platform for buying and selling properties. That's where buyers go to look for properties, and that's where sellers bring their properties. Okay. Hi Austin, COC, good afternoon, thanks for coming on. Figures from Rightmove shows that the average UK house asking prices, the advertised price. So when you go onto Rightmove and you see a property advertised for £250,000, that is the asking price. Okay, the asking price is not usually the sale price. It's not usually the agreed sale price. People can make offers. A property advertised for £250,000 might end up being sold for £230,000 in the end. You make an offer, the offer gets either accepted or rejected. So, but the Rightmove have been monitoring the asking prices, which is what the owners of the properties are asking for their properties. And they are saying the average asking price for UK properties now, for the whole of UK, remember it includes England, Scotland, Wales, Northern Ireland. Okay? For the whole of UK, the average asking price for UK property stands at almost £320,000. The average asking price. So specifically £319,996. So that is an increase of 5% in the year to September. So from January to September, they've been monitoring the average asking price. So it shows an increase of 5% in the year to September. That's according to Rightmove. So this figure is for the year to September. Now, if you now look at it from month on month, right, it represents a 0.2% increase from August. So it's a very, very marginal increase in average asking price from August. But this is figure for September. And that increase, or this particular figure, is just £269 short of the record figure that we recorded in July. So July was the month where we had the record amount, the record figure for average asking price. In July, the average asking price was £320,265. So now, and after July, it dipped a little bit by 0.2% in August, and now it's gone up again by 0.2% in September. And it's just £269 short of the figure in July, which was the record in decade in July. So it's kind of an upward trend again after that, temporary dip in August. So according to Rightmove again, there's an estimated 40% more sales in progress than usual for this time of the year. Like I used the conveyor belts example. So say you are loading stuff on a conveyor belt, and in this conveyor belt now you have loaded 40% more than what you normally load on that conveyor belt. What it will do to the conveyor belt is that the conveyor belt will be moving at a slower pace. So there is 40% more sales in progress in the pipeline than this time, than normal by this time of the year. So what is doing is causing delays in processes. Again, Rightmove is corroborating what we are saying in delays being caused by increased demand because of increased demand, and there is increased supply of sales in the pipeline. Okay, so now let's break these figures down regionally. Yeah. When we break it down regionally, Scotland experienced the highest increase in average asking price of 9%. Remember, the figure we have broken down is for the whole of UK, right? 5% on average. But let's now break it down regional and see how each region has performed according to the Rightmove statistics. Scotland experienced the highest increase in house sales, average house sales asking price, average asking price. Scotland experienced 9%. So the average asking price for property in Scotland now stands at 168,772. Scotland is followed by Yorkshire and Humberside. Yorkshire and Humberside follow Scotland with 7.2%. We are talking about average asking price. So there's a 7.2% increase in average asking price in Yorkshire and Humberside. Yeah, and that figure stands at £210,000 in Yorkshire and Humberside. Now, this is now closely followed by the Northwest, which records 7.1 increase in average asking price in the Northwest, and the figure stands at about £212,000 in the Northwest. The Northeast, West Midlands, and the East Midlands all recorded increases of 6% in average asking price. And now Greater London recorded an increase of 4.9%, while Southeast saw an increase of 4.4% in average asking price. The Southwest saw an increase of 3.9%, and East of England saw the least with the increase of 3.5% in average asking prices. Now, on a national scale, the agreed sale figures year to date were down by 5% compared to the same time last year. The agreed sale figures were down by 5% compared to this time last year on a national scale. Just 5%. I mean, that is significant, incredible. With everything that this year has seen and the pandemic has brought, the difference between the agreed sales figures on a national scale between now compared to this time last year is just 5%. Unbelievable. The other thing I need you to notice in all these figures I mentioned, broken down by region, no region experienced a decline in asking price. Every single region I mentioned here experienced an increase in asking prices, which means nationally there is an increase in asking price. People are asking for more for their properties than normal in a pandemic. So the reason the East of England, when we talk about the pandemic and its effects on regions and on people and on people's livelihood, the East of England, there is a very, very remarkable figure that came out of this Rightmove data. The East of England has already, the East of England and Southeast of England have already surpassed the level of agreed sales compared to this time, these two regions have already surpassed the level of agreed sales compared to this time last year. The reason being that the east of England and the southeast England are areas where you see a higher concentration of the affluent, the rich, the wealthy, the people who have got money. So the average house prices in those areas tend to boost up the figure and the data for average house prices nationally. Okay, so when you put the average house prices together for the east of England and for southeast England, people in this area they tend to be the ones who are benefiting most from the stamp duty holiday, because the stamp duty holiday basically says that for any property up to £500,000, you don't pay stamp duty on that. And how many properties are worth up to £500,000 when you move further north? You know, that's an area where the further away you move from the south, the lower the average house prices. So if you think of people who are going to benefit most from this, it is the people in the east of England and the southeast, where the average house prices are higher. So they are the ones who are really fueling the agreed sales figures, because they are benefiting more from the from the stamp duty holiday. They are the ones who are saving more from the stamp duty holiday because of the house prices, the price of the properties that they're looking to buy. So if you put two together, you say two regions alone have already surpassed the agreed sales figures as at this time last year. That is incredible. Nobody saw this coming. Okay, so that's what Right Move has given to us. Now let's break this down and see what these figures imply and how they affect the property market and the wider economy as well. You see, one of the key factors driving the asking prices up is increased competition among those who are seeking to step up. People who are looking to buy bigger properties, people who are looking people who are looking to step up the property ladder. We call them the second steppers. There is increased competition among the second steppers because, now let me tell you why there is increased competition. Before now, the reason people want to buy another property is basically they will say, I want more space. Hi, Glory, Austin, good afternoon. Morgan, good afternoon. Zuna, good afternoon. Thank you for coming on, guys. People would normally say, I want more space. Therefore, I want to buy a bigger property. But now the pandemic has brought in a different dimension to it. Apart from wanting more space, more and more people are now having to work from home. So there is now the increased demand from people who are working from home or who are looking for a home that is suitable for them to work from. Maybe they want a home with a bigger garden where they can build an outbuilding and have an office, at the back of the building. So they will not be in direct competition with the people who are looking for more space just for leisure or for family. So increased demand from these two categories of buyers is fueling the increase in asking prices. So if I put my property on the market and the property is spacious, the rooms are spacious, the living room is spacious, it's got garden front and back, and it's got enough space, even end of terraces or semi-detached properties now that have potential development for expansion. If 4 people are fighting for my property and want that property, it's natural that increased demand will spike the price. So I might just relax and say, okay, whoever can add an extra £10,000 to the property will get it. And I have seen people look at a property in the morning, putting an offer in the morning, and even without seeing the property, they just look at the property pictures on Rightmove or Zoopla or anywhere, and they like it. They say, this is what I'm looking for. Without even seeing the property, they put an offer, and they're putting an offer above the asking price. Say the asking price is £260,000 and they see the property, they like it. They just put an offer of £270,000. So you ring up the agent in there and say, hey, your property came on the market today. Can I arrange a view? And they'll say the property is gone. And be like, what? You just put the property on the market this morning? And they say, yes, we've got an offer above asking price. And and then the person who is ringing up can now say to the agent, okay, so what's the highest offer? And they say 270,000. Okay, I'll give you 275. Happy days for the seller. So these are the kind of things that happen in the markets, and the seller will be happy to take whoever the highest, whoever puts in the highest offer. So want of space is no longer enough excuse for competition. Now, working from home is even a bigger excuse, because some people now see working from home because of the pandemic. The pandemic has changed the way we work. People now see it as something that will last for a longer time and something that is big enough an excuse for them to buy a property, because they don't see themselves going back to the office. In fact, my online mentor in mortgages, Gary Das, when I was listening to one of his podcasts, he said that he did not renew his lease contract for his office now, so he's given up his office space. He's a mortgage broker, a renowned mortgage broker, very, very popular mortgage broker. He's got his own podcast and lots of followers on social media, and he's training people on mortgages and training mortgage advisors and mentoring them. And he's given up. He's got a team of about 13 people working in his establishment. He's given up his office space, and he said, I just realized I didn't need the office. So he's just built an out of building space in the garden. He's just built an office for himself in his garden, and he's working from there. So anyone who's coming for anything mortgage or any business comes to the office at the back of the garden. And then the mortgage brokers and all the members of his team are now working from home, because he said, I realized I don't need the office. So he's not renewing his lease contract. He's given that up and he's working from home. And it's the same thing across the nation. A lot of people are beginning to realize that they don't really need the office, and they're giving up the office and they're preferring to work from home. And because of that, they are now looking for properties that is suitable for what they want it for, especially working from home. So this to now from what I said before, on two regions surpassing the sales as at this time last year, it just gives you an indication of how much activities we have been experiencing in the property sector, and how this has come on, especially in these regions in the southeast and the east of England. So if the market continues this trend, the expectation, or maybe the forecast, is that by next month or so, all the regions in the UK would have at least broken even with compared to what the figures or the situation was like last year, because the trend and the speed and the volume of activities in the markets now, it's really closing the gap on monthly basis with what it used to be, compared to this time last year. So if the trend continues like this, there is a possibility that every region in the UK could actually either match up with what the situation used to be last year in terms of property activities and volumes of activities than what it was compared to this time last year. Now, talking about London. London is an interesting property market, right? People are moving out of London now, and because people are moving out of London, it's boosting activities in areas that are outside of London. Why are people moving out of London? A lot of the high-end properties that people were scrambling and fighting over for in London, because it's either close to workplace or close to their office in the city in London is no longer an attraction because people no longer work in those big offices anymore. The pandemic, in fact, yesterday, the announcement by the Prime Minister was like confusing because just a couple of months back, the Prime Minister was encouraging everyone to go back to work. Not even a couple of months, just like last month, was encouraging everybody to go back to work if they could. And then just yesterday, the Prime Minister is saying, please work from home wherever, whenever you can. So it's a confusing statement and a confusing message coming from the government. But you don't blame the government. They have to react to the situation. At the time he said people should go back to work, the number of people testing positive for COVID-19 was still within a manageable range. Now, it's just gone out of hand. So the government is struggling to get a grip on this. So they are going to work from home wherever and whenever possible. So this means a lot of people are moving out of London and moving into the commuting areas like east of England and southeast and all that. But people are now even looking and going beyond these commuting areas of east of England and southeast and going further away. People who don't mind the extra time of commuting to London because they just feel they won't even have to commute every day again to London. They might just want to go into the office once or twice a week, which was unimaginable before now. At the beginning of the year, if you told people who were in the city that by this time of the year, they wouldn't mind just living far away from London and then commuting to London just once or twice a week, they wouldn't believe it. But that's the reality we are living with now. So especially Zone 1 area of London, which is really close to the city or within the city, people are leaving the city, and not just London. Other major cities in England are experiencing the same thing. Other major cities in the UK are experiencing the same thing. People are selling up their properties in London and buying up homes in areas as far as Yorkshire or York, because there is a train connection from there to London, and they'll be in London, within a short time. And they feel, well, if I have to commute that much, I'll just do it once or twice in a week, and then I'll come back home and live it. Because house prices are a lot cheaper. People sell their flats in London and they use the money from the flat in London to buy a 4-bedroom detached property somewhere in York. Look at that difference. Flat, 4-bed detached. They will buy that 4-bed detached and they will still have change on top of it. So that's how crazy, house prices are in London. So London is a different market on its own when you are talking about the property market. So these decisions that people never dreamt of making in their lifetime, but they are doing it. 4-bed detached in York for the price of, say, a 2-bed flat in London. Amazing. So buyers and sellers, are constantly being advised to allow more time for sales to come through because, like we mentioned, delays are occurring at almost every stage of the sales process. Although there are still some lenders and some organizations that, even with the pandemic, they are being very efficient. But I must say, some organizations are taking advantage of the pandemic to cover up their incompetencies. I have experienced it. Some lenders I deal with are really a pain in the backside. They will keep you on the phone for ages. And then when they manage to pick the phone, they would, imagine us as brokers experiencing this. Then you can imagine what consumers and customers on their own are experiencing. Okay? Even they give us preference as brokers. In fact, there are dedicated broker lines for lenders that deal with brokers. So they give us preference when we want to speak to them. But even at that, some lenders keep us on the phone for a very long time. So I can imagine how they treat, consumers. And, the recent survey by a lot of, I think it was a lender that did that survey recently, showed that a lot of people are very disgruntled with their current lenders and their current providers because of the shabby services they have been receiving and the shambolic service they've been rendering in this pandemic. And I must say, some of them are just hiding behind the pandemic to excuse their incompetence. I have dealt with incredibly efficient and good lenders who they will pick the phone on time and they will give you the information and the answer you need on time, and you submit a case, and within, some of them even give you a guaranteed 24-hour turnaround. You submit an inquiry, or you ask for an information, within 24 hours you get it. So they still maintain that SLA, that service level agreement, while some just tell you, oh, it's the pandemic, and we can do this. Not saying that the lenders or the service providers are not experiencing these things, but hey, some of them are just using it as an excuse. So the demand for outer space and more space has gone through the roof, and buyers are happy to give up their city life for the garden and for the space in areas outside of London. So buyers are even looking beyond the home counties, and they are going as far as York or wherever they can find suitable properties that are cheap enough for them to buy and then commute to London. So if you are looking to buy property at this moment in time, it depends on the area of the UK that you're looking to buy. Just bear in mind that what we are experiencing now is artificial, to put it that way. What we're experiencing now is artificial, to put it that way. But it doesn't mean that being artificial, it's not real, right? It may not last for long, but then it's here. And because it's here, we've got to deal with it. So you've got to give time for things to happen. Don't be in a rush, or because things have not happened the way you want them to happen, you feel frustrated. Just, speak to your broker. Constantly be in touch with whoever is managing the sales process for you. So it's very important for vendors also, if you are selling your property, to understand that this is a mini boom. It will not continue for a long time. All right, it will not continue forever. There will come a time when this mini boom is going to stop, and we're going to get back to reality. So many predictions, so many postulations, so many forecasts about how long this is going to last have been going on and on and on. But, one thing we have noticed is that this trend doesn't look like it's going anywhere in the short term. At least between now and the end of this year, we still expect to see this. The reason being that those 40% more sales in the pipeline that Rightmove have identified, those are sales that are yet to be agreed and completed. And as those sales are being agreed and completed, the figures are rolling into the months that they are agreed and completed. So there's every likelihood that every month the figures are going to be getting better and better, or bigger and bigger, to the end of the month. It doesn't, to the end of the year, it doesn't necessarily mean that those things happen in that month. It simply means that the backlogs are feeding the figures, and the figures are turning out better than what we expect them to be. So, and that might affect the market in the sense that sellers might say, well, asking prices haven't dropped, why should I drop my price? Or sellers might say, okay, let me be realistic with what's going on around me and see if I need to drop my price, depending on the region where you are and the type of property. And so you don't get stuck in your house and say, okay, I'm not going to drop my price. If you need to drop your price in accordance with the reality of what's around you, because when you take a market survey of properties that are maybe 1/4 of a mile from your property, that will give you an indication of what around that area is for. If you ask for far too much from what their offers, your property will be in the market for far too long. But if you are operating within the realistic base of what is happening around you, what's around you, then yeah, you will be in a property and selling it at a price that is more realistic. Okay, so it means that even after furlough, down the line, even when one is one down, if the figure is still coming in as impressive because of those backlogs that are going to be feeding into those months. And remember, the furloughed workers are among the least earners, mainly. So the people who are fueling the market are not the first-time buyers or the low-income earners. The people fueling the market are the people with high deposits. And these people with huge deposits, it doesn't look like they've been exhausted. It doesn't look like that market has been exhausted. Until the holiday finishes in April next year, personally, I think this trend might continue into April, first quarter of next year, because of the people who are fueling the markets. Okay, that's my individual opinion. Okay, so let me give you quickly what the live case of the week is. I've had an interesting case this week where this client came to me. He's been to another broker who said, well, what you're asking me to raise for you, I can't get you that much, right? I'll get you this based on your income. And he came to me and he said, this is not how much I want to borrow. I want to borrow more than this. I took his documents. I looked at it. Hi, Amara, Nkechi, Christian, Kingslayer, good afternoon. Thanks for being on. I looked at his documents and I said, okay, let's give it a go. Okay, he's got about 3 defaults on his credit report. And I took a look at that. And then I made my research. I found a lender who was happy to lend even with the 3 defaults he had on his credit reports. And the lender was willing to lend £35,000 more than what the previous broker told him he could get for him. And I made that proposition to him and he was very happy with that. And I proposed, I said, because of these defaults on your credit reports, we are going to do a fixed term mortgage for a couple of years, and these defaults will disappear from your credit reports, and you will use it to build your credit report for this couple of years, and then we'll remortgage after that. He was happy. And then I looked at his income and I said, the reason this other broker couldn't use your income to get you what you wanted was because he didn't take a critical look at your income to suggest what could be done. And I said to him, there are complex areas of your income that we need to simplify. So rather than using these 2 sources of income, one of which is more complex, let's use one. And that one that we're going to use, we are going to build in the income from the second one into the first one. All you've got to do is that you've got to go to the HMRC and then correct what you have reported as your income, because then you have because you model things up, and what you reported as your income as self-employed is not helping your matters. So if you bring those 2 income together rather than treating them as 2 separate incomes and making it more complex, we use only one and draw the income from the other one and feed it into this one, because this one we have enough evidence to prove that you're earning more than enough on this one to give you what you want. And then I also went into his bank statement and I was able to fish out certain elements that we could also use as an income that the other broker did not identify. Things like his working tax credits and his child benefits and all that. The broker didn't even pick that up. I picked all those up and we were able to generate another £3,000 in income that we can use towards his mortgage. Added to his self-employed income, then we have what we need. He was very happy. And I said to him, so what is left for you now is to go to your accountant and then do what you need to do with the accountant and then bring me those documents and we'll go to full mortgage application, because we already have a decision in principle for him and I've already got him £35,000 more than what the other broker got him. Okay? Because we are good at what we do. All right, guys, thank you very much for being part of today's session. I really appreciate the support I'm getting from you, and please leave us your feedback. If this has been useful to you, let us know how you feel. Wherever you see us on social media, on Facebook, on Twitter, on Instagram, on YouTube, on LinkedIn, please let us know how you feel. And I'm looking forward to seeing you guys again on Monday during our Modesty's Money Masterclass. And next week, Wednesday, I'll come back to you with another bumper package of Modesty's Mortgage Masterclass. Until then, take care, goodbye, stay safe, and God bless. Bye now.